good part of the economy is heading for zero growth, and really, if you can just preserve what you have, you're doing well. Given that most assets are actually correlated, how do you allocate? There are no easy answers to this, but what we are seeing is particularly players who are looking at long-term returns. We touched earlier on renewable energy, particularly if you're looking at energy as a hedge against inflation. That does make a lot of sense. Alternatives, in general, more people are allocating toward alternatives. Here is just an example of Africa as a growth area with historic IRRs of about 43%. This is based on the research that we have done. We basically looked at every investment we could find, and this was the IRR that we came up with. But if you talk to investors who have been investing in Africa and in emerging markets in general in private equity, their African returns tend to be the highest. Now this is, for example, a portfolio with the Commonwealth Development Corporation in the UK and others who have invested in Africa for some time and actually have good, and there is good anecdotal evidence that those returns are reasonably high. And we're still talking about relatively low multiples, but closer to times money. So clearly, the history is not a predictor of the future, but if we're looking at Africa as a growth area based on demographics, based on the opportunities that are presenting themselves from climate change and so forth, here is certainly an area that one can look toward for significant growth. And again, in an environment where people are looking for alpha, where they are looking for superior financial returns, I think it's unfair, particularly in this time of uncertainty, to make people choose between financial returns and social impact. It's a tough choice to ask people to make, and I really think people want to have their cake and eat it too. Where you have significant financial returns, but also a quantifiable social and positive environmental impact. And we believe certain growth industries that we have described with the right investment profile and so forth can achieve these returns. So very briefly about our sustainability model. Some people would say, well, if you invest anything in Africa, it has impact. So every dollar that's invested has impact. I'm not sure I would go that far, but certainly I think you were looking at a sustainability model. Geography is obviously one point where there is the opportunity for leapfrogging of technology, for preserving environmental capital. So geography is one. Then looking at the sector, is this the sector that is at the core of poverty alleviation? I think what we are seeing right now is really a trend of back to basics. I think Ian Sims talked about it earlier, about people wanting to invest in real assets. I really think that there is a healthy development here right now where we are moving away from nice to have to what do I have to have. It's this, what do I have to have? And so this service enabler, environmental sustainability. Then obviously we are looking at our investment analysis, the ESG valuation, and then accountability. And really in this order, economic impact first, because I don't think anything is sustainable unless there is a decent financial return, and the financial return has to be there, it has to justify things. The environmental impact, and we put here resource stewardship, and also just touching on carbon credits. Being here in Japan and knowing that the Kyoto Protocol a few years ago created so much excitement, I think the markets really are waiting for a regulatory framework that is a meaningful successor to Kyoto. Not having a global regulatory framework that can stimulate the carbon markets is really hurting the investments in renewables. We talked about feed-in tariffs and so forth, but if we had intelligent, liquid carbon markets that are transparent, it would go a long way. And we'll see what's coming up in Durban, but there is really a call for meaningful regulatory solutions to this. The social impact, we just look really primarily at skills transfer and technology transfer, and then at governance, primarily at transparency, at management structures, and so forth. Let me just say in conclusion, a number of these things are not rocket science. Governance, whether it's Lehman, for example, or a company in Africa, governance transparency is just as important in one place as in another. We will debate for a long time to come why Lehman was allowed to go under, for example, and others like Merrill Lynch, and I think John was here representing Bank of America, Merrill Lynch. Why was Merrill Lynch bailed out? We can really talk about that, and happy to do that offline. But one of the factors, I believe, that contributed to Lehman's demise was the lack of transparency. Nobody knew what was in the bank, and so that principle really is not unique to Africa. It applies to all of us. So why Africa? And I think particularly in being here in Japan, I think it's particularly poignant because I look at your very large neighbor, China. China is all over Africa right now, all over, and it's a very strategic approach to African commodities, to land, and it's really in China's interest to be in Africa. I was part of a trade delegation to China a few years ago, and the leading scientists and government representatives from the vice chairman on down wanted to talk to us about two things. They wanted to talk to us about climate change and entrepreneurship. Climate change and entrepreneurship. The Chinese are in Africa because they are looking at Africa as a strategic partner for commodities, for agriculture, for various things that are in China's interest. And I have to ask each one of us, what are we doing in this area that is going to be a fertile area of growth? I will never forget a Chinese businessman who just looked at us when we were talking about investment opportunities, and he shook his head. He said, I don't understand you people from the West. You are all piling into China. Why don't you look for a change where the smart Chinese are investing? I'm not going to answer that, but so that's a rhetorical question. But I think we are looking for game changers. We are looking for the large technology providers. We are looking for the utilities, because there is a whole market out there that can really open up things for technology-savvy companies, for utilities, and can really, really, truly be a game changer. So this is a passionate plea for Africa, but not a plea in a philanthropic sense, but really a tremendous invitation to invest in a growth market where we can indeed generate financial returns, superior financial returns, but also make an impact no matter how you want to define that, but certainly where it's a win-win.